Bitcoin is dumping, treasury companies are bleeding, and fear and doubt is seeping into the market. So what's going on? Michael Saylor made a controversial announcement yesterday that has some investors losing confidence in the Bitcoin treasury thesis, as the debate whether this strategy is a Ponzi scheme or not resurfaces. So did Saylor just break the Bitcoin treasury model? Is the whole strategy Ponzi adjacent? Or could this be a coordinated shakeout before potential S&P 500 inclusion? Today, we get to the bottom of what's happening to Bitcoin, to the treasury company thesis, and whether or not this market sell-off is signaling the end of the bull market as we know it. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host, Hurley. Now let's get into it. Less than a week ago, Bitcoin hit a new all-time high of $124,500. Since then, it's corrected quite a bit, and this week that correction has gone deeper, with the price going as low as $113,000 today. This steepening correction to start the week comes on the heels of Michael Saylor announcing an update to MSTR's equity ATM guidance. Here's the key line from the slide that got the reaction. Below 2.5x MNAV, strategy will tactically issue MSTR to pay debt interest, fund preferred dividends, or when otherwise deemed advantageous. That single clause sparked outrage and panic, because up until now, investors were told that MSTR would only issue stock above 2.5x MNAV. Now, optionality is back on the table, even as valuations across the treasury space are collapsing. Now let's unpack this a bit. MNAV, or market net asset value, is a measure of how much premium a treasury company trades above the value of its underlying Bitcoin. When MNAV is high, issuing stock to buy more BTC is accretive. When MNAV collapses, as it has across the board this summer, the whole model looks broken. But here's the nuance. Collapsing MNAV isn't fatal. On the latest episode of the Hurdle Rate podcast released today, Ben Workman explained that these valuations ebb and flow with sentiment. And yes, traditional finance is actively shorting them now to push the MNAV down. And the noise in the market, it looks to be from classic fiat-induced short-term thinking. So let's tackle the big accusations that keep resurfacing. Is strategy a Ponzi scheme? Some softer critics like Checkmate and Andy Constant call Bitcoin treasury companies like Strategy Ponzi adjacent. And the logic is simple. Issue debt and equity, buy Bitcoin, Bitcoin goes up, raise more money, rinse, lather, repeat. That feedback loop does look self-reinforcing. But let's put it in context. Apple spent $440 billion on stock buybacks in the last 5 years. I mention this to make the point that Wall Street is 90% financial engineering. Strategy's loop isn't fraud. It's leverage and accumulation, with Bitcoin as the building block. Unlike a Ponzi, there's no obligation to pay old shareholders with money from new buyers. It's also transparent, SEC filed, and collateralized by the hardest asset the world has ever seen. Matt Cole, CEO of Bitcoin treasury company Strive, laid out his view on the noise in the market on the latest episode of the Hurdle Rate podcast, which I think captures it perfectly.
This strikes me a lot as short-term thinking, in a similar way that if every time a Bitcoin treasury company traded at 1.1 or 1.2 times MNAV, there was this push to just issue common equity as fast as possible because they're trading above 1 MNAV. That to me is pretty much the equivalent of buyback shares because you're trading at a 0.9 MNAV or something like that. It's short-termism. I think as an equity holder, as senior management, executive management of one of these Bitcoin treasury companies, you need to be thinking over the long run. And what is the long run? Well, in my view, we have a 10 to 15 year period of a digital gold rush. And in a digital gold rush, you want to accumulate as much Bitcoin as possible during that time period. And so if you're thinking in terms of a quarter, which typically in standard markets, you see executives get hammered when they think about just one quarter. They want people to be thinking in years. But in this space, because of the volatility, there are a subset of investors, and I don't think it's the majority of investors to be clear, but a subset of investors that do think more in the short term. Option traders, people that put very short-term trades on, that are betting on the direction, the size, and the time in a very short period of time. They need something to happen and they need something to happen now. Well, if you think about how an intelligent Bitcoin treasury company is designed, you're putting on an intelligent leverage. If you think about these perpetual preferred equity instruments, you never have to pay back the capital. It's a perpetual instrument. You're betting on a long-term thesis. And so you don't unwind a long-term thesis because you've seen 1 month seen something traded at a discount. If you saw it, to Ben's point, if you saw it to go a super deep discount that was persisting for time, well, that might be an interesting opportunity to consider buying back some shares in a way that's really accretive. But it's okay at times to wait. Like that waiting for a little bit is not a bad scenario. And I think this also gets back to me of there's a lot of, I would say, angst just in the broader Bitcoin ecosystem, even beyond just Bitcoin treasury. And I think it's because we're not in as much of a bull market yet as people think. There's the Bitcoin gold chart. And I think the Bitcoin gold chart's really interesting. I'm going to pop this up real quick, because if you actually look at the Bitcoin gold chart from 2021 to now, we have not broken above all-time highs. If you actually look when we kind of flirted with it, it was late 2024, right when you saw peak hype in the MicroStrategy trade. So I think what you were seeing in that time frame at the end of last year was the expectation that we were entering a significant bull market in Bitcoin relative to other commodities, and the market got a little heated and then it sold off. And now we're kind of flirting with that high again, but we haven't broken out. So I think there's a lot of questions. Anytime Bitcoin sells up at all, is it a bear market? Is the top end? I don't think that is the case, but a prediction that I'll make is if Bitcoin breaks out above all-time highs relative to gold and sustains here, I think you're going to start to see levered exposure to Bitcoin also break out, because what is that about? It's about greed. I think right now you're seeing fear, and markets operate in fear and greed. And once you see that greed step in, companies, Bitcoin treasury companies that actually have forms of intelligent leverage on, I think are going to start doing really well. And we are in this digital gold election. I think that's the thesis, and that's the conviction that you're actually paying and want your executives in these companies to have.
As Cole points out, this isn't about 1 or 2 quarters. It's about positioning balance sheets for the next decade. Panic over MNAV misses the forest for the trees. Just like Bitcoin's short-term volatility is used as a means to write off Bitcoin as a store of value. Preston Pish frames it brilliantly on You're the Voice with Efrat Fennison. He explains what Saylor has actually built inside Strategy, and why it's less a house of cards and more like an engineered machine.
When you look at what Michael's doing,
Yep.
he's preparing for an adverse environment and also a very advantageous environment.
Mm-hmm.
When these central banks like print and they lay on the floodgates of fiat,
Mm-hmm.
he wants to be able to set the sail. He wants to be able to change the gear into the 21st gear on the bike and rip down the mountain. Okay.
Yep.
He also is prepared for what we just went through, which I would argue for much of 2023 to like the start of 2025 was a tightening environment. It's akin to going up the hill.
Mm-hmm.
And I would say that all of this issuance that he's done in the preferred stock market is preparation for the next time that they would go about tightening the fiat and going up the mountain.
Mm-hmm.
Okay. He's built a transmission. He can adjust the gears based on the environmental setup. If they're tightening the money supply or they're loosening the money supply, he has all the gears there to like make this thing rip and to keep. And the goal is on the bike, if you stop, you have to put your foot down or you fall over.
Mm-hmm.
And the name of the game is to keep the inertia in the wheels to keep it going forward. And I feel that what he has on the market today is enabling him to keep that thing moving forward. And that would be a positive MNAV, like an MNAV over 1.
Ponzi schemes collapse the moment new money stops flowing, but a transmission is designed to handle different environments and keep moving forward. So this isn't about tricking investors. It's about using every available gear to accumulate more Bitcoin through every cycle. The name of the game is Bitcoin accumulation in all environments. Now here's where the long thesis gets interesting. Strategy has already cleared the final objective hurdles for eligibility into the S&P 500. Now it's important to keep in mind that the index committee's final decision is not formulaic. It's discretionary. But speculation now points to a potential announcement in the September rebalancing window, which falls in around September 5th to 10th. And if not then, there's still another shot at the December rebalance. So why does this matter? Because inclusion in the S&P 500 would unleash billions in passive inflows. Some estimates range between $10 and $25 billion. For a company like Strategy, already the largest corporate Bitcoin holder in the world, that kind of forced demand could be rocket fuel. So when you hear the noise about collapsing MNAV or Ponzi schemes, remember The real story is that this playbook is setting up for mainstream legitimacy and massive passive flows. Again, Saylor is setting up for the long game. And if you're serious about your own long game, Swan Private might be for you. Swan Private works with high net worth individuals, family offices, and corporations to build Bitcoin positions with full concierge support, education, and custody. Swan doesn't just help you buy Bitcoin, it helps you build a generational Bitcoin strategy. Visit swan.com/private to learn more. And if you want to meet the people shaping this bright orange future, join us in September at BTC in DC, the premier policy and advocacy event for Bitcoin in America. Meet with lawmakers, connect with industry leaders, and help push the next chapter of Bitcoin adoption forward at the historic Kennedy Center in Washington, D.C., September 30th to October 1st. Visit btcindc.com for more info and use promo code SWAN for 10% off your tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So amidst all the fear, uncertainty, and doubt creeping into the Bitcoin market, remember that institutions are positioning quietly behind the scenes. For example, Royal Bank of Canada just increased its MSTR stake by nearly 16% in Q2 alone. Follow the signals like this and not the noise. And if you're more concerned about the short-term Bitcoin price, here's some sage advice from Pierre Rochard. Sideways Bitcoin price is maintenance and tightens the bolts on a long bull market. MAs catch up, support hardens, leverage resets, and new capital onboards. This is how we could avoid steep 80% drawdowns and big bear markets. And don't forget to zoom out. Remember, Bitcoin's current all-time high of 124,500 was reached less than a week ago, and Bitcoin is up 615% over the last 32 months. Consolidations like we're seeing right now doesn't spell the end of the bull. It's the fuel for the next leg up. This week's fear is just a microcosm of Bitcoin itself. Volatile in the short term, unshakable in the long term. And strategy isn't a Ponzi. It's one of the boldest bets on Bitcoin ever attempted in public markets. If you believe in Bitcoin, it becomes clear that it's genius financial engineering. And if you don't, it admittedly looks like reckless leverage. Either way, the game is only beginning. So what do you think? Is strategy reckless leverage or genius engineering? Should treasury companies defend MNAV by selling Bitcoin or keep stacking no matter what? Drop your thoughts in the comments. Don't forget to like this video, share it with your family who still thinks strategy is a Ponzi, and subscribe to the Swan Bitcoin channel for more high signal videos every single day. Thanks for watching, and remember, there is no second best money.